Hey, what's going on? It is Friday. Happy Friday. Here we got Miss Sarah. How you doing, Sarah?
I'm great, Zach. How are you?
Doing well, doing well. It's another financially fluent Friday, so I'm feeling good. Glad to have you
Right?
back.
Keeping you in the know.
You know it. You know it. Actually, you brought up some really good topics. And it's funny, as we were talking about topics, the stuff that you brought up is things that I've literally had conversations about recently. So it really does hit home, and it's pretty important to talk about. So I'm glad that we're going to jump in on them. Glad to have you back, and I know you've been out there hustling. I saw another unit close for you, so congrats on it. That's awesome.
Yeah, I had one close and then we got four going live today. So it'll be a busy weekend, but it's good. It's all good.
That's a beautiful thing. Well, let's just jump right in. Let's start talking about some of the topics. I think the first topic's one that is really hitting home right now. I'm going to bring up a little ticker here. Talk about deed restricted units, and it's really interesting. You mentioned this because this is something. There's a really popular property. I think a lot of people have been looking at, kind of up in the North County area. That is it's a condo. And as you look into these things, it says very clearly on the description it's deed restricted, and not a lot of people understand what that means. And so if you want to jump in and talk about that a little bit, and I can share some of my insights with it as well.
So the entire purpose of deed restricted units is to start creating more housing, right? So builders get incentives to build more by creating these deed restricted units, meaning that they are made for. Sorry, guys, we got construction going on today, but the deed restriction is to help uh, more housing be created by incentivizing these builders. So if you put a deed restricted unit on, instead of only being able to build one unit, maybe you can build two. But it has to go for low income, and there's very certain parameters that you have to meet in order to qualify for the deed restrictions, which maybe Zach you can get more into.
I definitely can. And so, first off, typically speaking, at least the ones that I've seen recently are all through. You have to be licensed or authorized with the San Diego Housing Commission, which I've done in the past. And the reason I didn't re-up it just because really there's not a lot of those units yet, but it seems like they're starting to do more of that. First things first is you have to be a resident, so you can't be a transplant. They want you to have been in San Diego for a certain amount of time. Second piece of the puzzle is that there's actually very strict income restrictions, obviously, and which is kind of an interesting double-edged sword here in San Diego as well. And then the third piece that I see that's really important is that there's actually occupancy rules. So for the number of bedrooms that they have, that actually dictates how many different people are going to can have to occupy the property. So you have to have, so if I think it's a 2 bedroom, you have to have 3 people occupying and down the line. And it's really important. And then the other side of the coin is that anybody that's over 18, they're going to look at that income. So with those income restrictions, that comes into play. And those are the three main things that I've seen. And there's a few other wrinkles along the way, but those are the things that I've seen that have really impacted or kind of put people in a spot where they weren't going to qualify. I had a client that's in New York that's looking to relocate out here with her family. And unfortunately for her, I mean, on paper, it seems like it'd be great for her, but she's transplant and it doesn't work. And her daughter, unfortunately, won't qualify by herself. And so it's one of those things that just didn't happen. Um,
We had the same. We had a family of three, and they wanted that one condo in North County, and you had to make I think it was like $87,000 and have a family of four, and so it is very restrictive. So while it seems like a great opportunity, it's not really made for everybody. And also, Zach, let's not forget that there's actually a wait list for those units. And I mean, I think the one in North County had like 276 people on the list. So it's not only difficult to qualify, but you're also in a long line.
yeah. Yeah, and that, it's a tough conversation to have with people because obviously it seems like such a great deal on paper, but at the end of the day, the stress that you're going to go through to try to make it work, and reality is that it's just there's a very small sliver of people that are going to fit for that. Just period. It's a
Now,
niche.
I will say, Zach, I think that some of that is going to shift and change as we move further and further into this ADU space. The reason being is I went to a feasibility study the other day, and what that is like they go to a property, they look at the lot, and they say, okay, how many units can we put on this lot? Now, with the ADU rules as they stand, if you're willing to do deed restricted units, you can actually add more. So instead of only being able to put like a 1 bed, 1 bath, you can now do a studio and a 1 bed, 1 bath. And so that's going to be easier to qualify. And I feel like with SB 9 and 10, we're going to start seeing more and more of that. And we're probably going to see more of these deed restricted units, smaller, studio 1 bedrooms, but in order to satisfy the city and to be able to add more units to the space.
Well, it'll help. I mean, obviously, with the housing crunch that we've seen, and with some of the inflationary things that are happening, it's definitely something I think would be great to see, because I think it would open the door for a lot of buyers that may be feeling that it's just not a good market for them. And I like that idea. I think it's a very
Well,
good
and not
step.
only that, but renters, we have no rentals available. Like we have people on wait lists and rents are getting higher and higher. And so having some infill development that is deed restricted, I think might be good for the city.
Yeah, no, that makes perfect sense. I love it. Yeah, so bottom line, if that's something that's interested to you, we could talk about it, but just know that you have to fit a very, very, very small special niche in order to fit there at this point, and we'll keep you updated if it changes. So the other piece, next topic I wanted to cover, I think, is something that's really important, and I have a ton of experience with this. I'm sure you do as well. It's buying new construction. Now, there's a lot of benefit and a lot of there are pros and cons to anything, right? But with this, there's a lot of emotional appeal to having a brand new home. But there's some things you need to know and worry about. So I'm going to let you start off with that, and I'll jump in from the lender's perspective. But what do you see on the new construction side?
I think the biggest thing to know is that the model is not the end product that you're getting, right? You walk through the model, you're like, oh my gosh, it's beautiful. Look at the tile, look at the floor, look at everything. But the base model is much different. So get into it knowing that you will be paying for upgrades. And the models are designed to get you excited and to make you fall in love with that look, because that's where they make their money, is in the upgrades. So I would say that that's one thing. And also, I think that there's a little bit of a misconception that when you buy new construction, everything's perfect, which isn't the case. I still recommend that my buyers get a home inspection. We had one in Santee on that new construction over at the West End, and the drain lines from the upstairs shower weren't connected to anything, and they moved in and all the water just flooded their living room. So you are protected in some sense, since the builder does have a 10-year warranty on most of the products, but I still recommend knowing what you're getting into. And I think that that's probably the two things that I need to address. And then the backyard, of course, the backyard's always dirt. So be ready for that as well. Have some landscape budget.
Yeah. Well, who wants to move into a brand new place and then run into that kind of nightmare? That's a pretty big nightmare right there. Even if even if it's something that's relatively easy fix. So from the lending perspective, there's a couple different things to know. The first thing is that right now, obviously, we have a pretty volatile rate environment. I had my most recent new construction. I had to lock for 90 days, and it ended up working out in our favor that we did, because I watched the market and I knew what was going to happen, and they were pretty good as far as closing on time, as far as the construction part, and we were ready to go. It's just one of those hurry up and wait situations. But you're going to find yourself locking on a longer term, which it's not necessarily a bad thing in this market anyway, but you do have to be aware of that. The other side of that is, are they going to finish on time? Are they going to get completed on time? Which, with inventory issues, with supply line issues that we've seen, sometimes has created a little bit of a problem there. And then, depending on the area, one thing you want to look at is, are there going to be additional taxes, CFDs, Mellorues, added fees for the newer development, for the different amenities? And those are things that you really look at. Typically speaking, one nice thing from my experience is that at least they will usually know what the tax rates are going to be. They'll usually know what the assessments are going to be, but it's not going to be that normal lower tax rate that we see here in San Diego.
That is true. And the other thing too is a lot of the new construction are not allowing you to bring in an agent. They're actually having you to negotiate everything directly with the builder. So I know that some of my clients have felt a little uneasy because they feel like they have no representation. And while there's not a lot of negotiation that goes into new construction, there are things that you should be aware of and that you should know, and the right questions to ask. The other thing is the wait list portion. A lot of people, I remember when Three Roots in Carmel Valley came up, they wanted to find out, how do we even get to this list? There was 4,000 people on the list before it even was announced. And then by the end, it was like a lottery of 40,000 with 400 units, So I think it's important to contact somebody and have kind of that direct contact of, okay, who are the new construction people? How many units do they have? How do I get on the list? What questions do I ask? I think it's a very valid conversation.
Yeah. From the lender side too, they're always going to have you cross qualify with the lender, which is never an issue. I think they do a lot about I call it numbers magic, where they try to make it look like they're going to get you this amazing loan. They give you credits, they offer all these credits. But what I found is that obviously when we do an apples to apples comparison and look at the bottom line cash to close, I always win that conversation. That's never an issue. So I don't really ever have a problem helping out with the cross qualification there, but expect to have to do that. The thing that I found though is that usually the lenders that they work with are going to have overlays and extra rules. And so if you're one of those files that there's some extra things to take a look at or some wrinkles that you need to be aware of, that can create problems for you. So a while back I had a client that, a couple of years ago now, where they purchased a new construction. It was a VA client. And they offered the world. They came in and promised everything, right? And I told them, listen, if they're going to do this for you right now, take the deal. I'm not going to try to talk you out of it. Long story short, it almost fell apart and they almost lost the property. They were going to walk away. They came back to me and I saved it. Not only that, I got them a better loan, which I knew I would have, but they were offering things that just weren't realistic at the time. But long and short is that they came back. I was able to make it happen. We got it done in a very fast time frame. We're waiting for them to finish construction, which was a good problem to have. But they couldn't get the loan done, and so that's important.
Zach, we have this conversation a lot with buyers on my side, which is, I have a VA loan that I want to use, and I'm not picking on the VA. I'm just saying I know a lot of people do this, or like I have a bank I want to use, and they want to go to their bank, and I'm always the one that's kind of like, okay, well, great, but get a second opinion from a mortgage broker, and explaining the two. And I think that a lot of people kind of miss this, but the bank has a box, right? And when we talk about overlays and we talk about things, it's what's the requirement for the loan. So, Bank of America might have a box that says, all right, your credit needs to be 640. You have to have this debt to income ratio. You have to have this in assets, whatever. And I think that what the mortgage lenders do, or the mortgage brokers, excuse me, is they go to all of the boxes and say, okay, well, what box is best for the client, not can the client fit in the box, right? So I totally agree with the new construction. They may offer you crazy incentives, but a lot of times they're very, very their box is very small of who actually fits in that.
Yeah, exactly. And the math, I think at the end of the day, when you do a side-by-side comparison, it very rarely do I find myself in a situation where I can't get a better loan. And that's the thing. I don't work with overlays, and most brokers won't work in an overlay situation. They're going to make sure that they get you in a loan where it's as smooth and easy as possible. Because that's the thing a lot of people don't get, is that Fannie Mae, Freddie Mac, the Ginnie Mae, the VA, all of those different loans that you would have, they don't have extra rules. They have very simple, cut and dry guidelines. These added extra risk mediation factors is really what it is. It's basically what people they try to limit their risk, and that's what you kind of run into. So, 100%. It's I have this conversation often, obviously, as well from my side of things, and the nice thing is that at the end of the day, you can kind of the results speak for themselves, and so it's excuse me, it ends up being a conversation that's pretty easy to have once you start to really cut through and get down to the nitty gritty. So, all right, well, I added one last kind of topic, and I think this is really important in this market. And I know that for you with shoppers out there, and how competitive it is right now, and the rate market's moving, lock and shop. And there are some banks out there that are allowing to do what's called a lock and shop, where you can basically lock in your loan for up to 180 days in some situations, and you're going to pay a premium on the rate. But the thing is this, we know right now that it's as competitive as it's ever been, right? We know the market. You're going to be house hunting, even with a great agent sometimes, depending on the box that you fit. You're going to be shopping, you're going to be fighting, you're going to be competing. So there's an option where you can lock in a rate for a longer term and protect the rates. And I have to tell you that right now, I'm actually recommending that for a lot of people, depending on the box, depending on the client. There's certain clients that they have the perfect profile and they have the extra money to really go aggressive, and they're going to be the one that wins that 250,000 over asking coming in, all those sorts of situations. But for the client that is really rate averse, that's really set with the debt to income, where if that rate goes up too high, they're going to lose their buying power. That's the client that really needs to look at doing this lock and shop option. So do you have any experience with that? Or have you worked with anybody, or also from your side, as far as from the shoppers, what do you see there?
I have not had anyone lock and shop. I think it's a great idea, just because rates are changing daily, and so and you can always relock down, right, Zach? Like, I think that's something that people don't quite understand, is that you can lock in the rate of 4.67 today, but if it drops to 4.4, then you relock at 4.4. So I think sometimes people are a little hesitant to lock because they're not sure if that means that they can't go back down. Now, but what it protects you from is the rates going back up, right? The other thing, and I think that this should be a topic for maybe next Friday, is we've started to have the conversation about option arms and about interest only and about some of those products and when are they right to use, who is the right buyer to use them. And I think that we're going to see more and more of those come to market as rates continue to fluctuate. And so I think maybe next week we add that to the docket of things to discuss.
I like it. I will. You know, and as on the lock and shop side, so I have a client right now that has been under contract on a house, found the house they fell in love with. I got him locked in. We did a longer lock because part of the contract is that the seller had to find a replacement property. And as rates have gone up, and as they went out shopping with a particular price point in mind, and then come to find out they found the dream house, 850, I think, or somewhere in that range is where they were shopping. They found it. They have cash. They're in a good spot. They're walking away in a great position, except for that the rates went up on them. The rates went, and I personally, part of this, I think that I actually did a little video on this last week that, you know, being in communication, their lender should have been in communication with them, because from what they said, they were expecting the rate versus the new rate. It was like over 1% difference. So that's a conversation that shouldn't have been had while you're out shopping. That should have been had along as the rates were moving the way that they were. But now my client, my buyer, is sitting there going, what do I do? You know, he found the dream home, but he's also not been out competing on other properties because he's been waiting for them to find this. And now they've had to completely shift their search around. And it's obviously it's frustrating for everybody. You know, nobody wants to be in that situation, but their realtor actually almost told them to terminate the contract and to walk. And they instead of shifted their search parameters, dropped their price point a little bit, but it really impacted everybody. It's impacted, you know, multiple different strings in the transaction. And that's tough.
And the other thing, Zach, too, and maybe we add this to next week because I know it'll go a little bit longer, is what's worth more, right? Like, I know it's important to have cash, but I think some people don't understand, like putting 8% versus 12% down may not really affect you much on a monthly basis, but it affects you way more to have that cash liquid. Can we buy down the rate? What are our options with the cash we have? Do we need to put it all in down payment? Does that actually benefit us? Or is it better for me to spend 10K and drop the rate, you know, half a point, whatever we can, and then get a better monthly payment versus, you know, having all of that eaten up in our down payment. So I think those are things that we should definitely address, because I think that there's a lot of different ways that you can reconfigure a loan and use your cash to your best advantage. And I don't know that every agent really knows that side of it.
I actually offered to jump in and try to give them a second opinion on it. Obviously, you know, there's partnerships and things like that, and people are pretty protective and all that. So I didn't get an opportunity, but I feel like that's something I was thinking along those lines. Okay, what can we do to restructure this loan to put them still in the buying range that they want to be in and get them to where they can get the property they're looking at? So you're 100% right, and that's that. There's a lot that goes into that too, and let's pick up on that a little bit further next week too. I definitely agree. So. All right, well, but on the lock and shop side, it's not a bad idea. At least look at the numbers and look at the trends. You know, the trends will tell you a lot. Right now, the charts, the trends, the numbers, everything we're seeing is pointing one direction. And there's a lot of chatter that we could see them continue to go. I always tell my clients, and I say this kind of jokingly, but if I knew exactly where the rates were going to be, I'd be on an island somewhere and we wouldn't be having this conversation. But that being said, the data tells us one thing, and the data tells us there's no reason right now that we're going to see a pullback. So if you're actively shopping and you want to be competitive, protect yourself, and you're in that tight range, protect yourself, or at least look at doing that. So,
Zach, real quick, how long can you lock and shop? What is the time frame?
Up to 180 days. Up to 180 days. So which is a lot.
That's 6 months, right?
Yeah, and you're going to potentially pay a premium for that rate. But 6 months, if the last 3 months have been any indicator, the next 6 months are going to be very interesting as far as interest rates are concerned. And bottom line, I know that, you know, we've talked about the Fed rate not really directly impacting mortgage rates, but as the Fed goes lately, at least, we've seen mortgage rates kind of slowly follow based on, you know, investors' fears without going too technical. So the trends that we're seeing are telling us that we're going to see them continue to move. So if you really feel like, you know, even doing a 3 month, you know, look at the numbers, and the numbers will tell you. A good example, like I said, my client right now that we locked him in at 60. We're looking at 90, and you know, there's a big difference between 60 and 90. But from when we initially showed him, I had him look at it a couple of weeks ago, 3 or 4 weeks ago. Say, hey, I think we should probably consider doing this. I think it makes sense. He's lost over an 1/8% in rate in that 3 weeks. And that's, you know, not a huge amount, but it's also enough that it really can impact certain buyers. And if that's actually it's probably been a little bit more than that. I think we had a nice little dip. I timed it right without going too far, but we saved them a little bit. But had we locked in, a couple days ago, it would have been probably almost a 3/8, I think, at this point. So yeah. Anyway.
Well, Zach, until next time. So next week we'll touch on option arms, interest only.
I like it.
And then we'll come up with some other topics for you of what we were seeing in the market today. But thanks for joining us. Hopefully today you're a little bit more financially free.
Happy Friday. See ya.